The use of professional money and risk management is your foundation to financial success. Why? Money management will tell you how many shares to buy. It's the most crucial concern a trader or investor faces. It determines your risk and profit. It's a defensive concept that keeps you in the game to play another day. Risk management will limit your losses and protect your profits by using a stop loss and trailing stop. Some may also include a technical stop. Welcome. My name is Joseph Barrington-Lew, and after more than a dozen years, I found that this knowledge, or lack of it, being the major reason why most traders and investors lose money. Let me introduce you to JBL Risk Manager. It's a simple program that will keep your emotions out of the market, protect your trading capital, and limit any losses. Now, after installing your trial and clicking on the shortcut icon on your desktop, this 14-day trial window will appear, and this registration number here is what we need you to send us in order to activate the program, if you then decide to purchase it. Let's begin. Hit OK. This is your trading summary page, and all the values will make more sense once you've opened up a few more trades. Now, the first thing we do is click on the settings button. The risk management settings shown here can be altered if you wish to suit your own risk tolerance or local market prices. Now, the higher the ATR multiplier and percentage stop, the further your trailing stop will be from your last closing price. For example, if the share price is above $3.49 but below $4.50 and in profit, your ATR trailing stop will be set 2.07 times the current ATR value below the highest high since entry, and your percentage stop set at 6.49% below the last close. If you're also using a technical stop, the highest price is the stop that's in control. Now, the money management default settings here calculate for each new trade your recommended share quantity, your maximum risk, and your initial stop loss exit price. I prefer to use 19% rather than 20% for maximum trade size because with 5 open trades, I'll still have 5% out of the market to allow for other costs such as data, slippage, etc. that may occur. Now here, simply enter the currency you're trading in, and then click on Add Directories to select your Metastock database. Now here you navigate to the Metastock directory by first clicking on the C drive, then Shares, and then AUASX, but this will vary depending on your data supplier, and hit OK. Now this reads your Metastock data and displays the company's name and price details. Simply click on Save Settings. Now click on Change Capital down here next to the Settings button. Enter your starting capital, let's say $25,000, and hit Deposit. Hit Change Capital again if you have any other deposits or withdrawals to make, such as dividend payments, data service renewals, etc. Now here is your help file. Click on it and read all the contents. But you will need Adobe Reader. Now let's close it for now and begin. Click the New Trade button down here. You can see that the trading capital and available cash is displayed. Click in the symbol box. Scroll down and select E and enter EQN in the security box. And hit OK. Here it has calculated your initial stop loss based on the last close, your maximum dollar risk, and your recommended buy quantity up here. Now, click in the buy date box here and click on the 3rd of December as your anticipated buy date for this example, and hit OK. Here the recommended buy quantity is now 948 shares, but the program looks at the last close prior to the 3rd, which is 501. We need to allow for brokerage, let's say $29.95. So we place an order with our broker to buy 942 shares of EQN at open on Monday the 3rd, but it opens lower and we end up with 942 shares of EQN at $4.99. We need to alter our buy price to $4.99. We've also included a trade journal, a simple method of recording your information about each trade, like why you bought and sold it, any influences, any company announcements, etc. Now here, next trade at, it will suggest to you when to look for another trade. Here, for example, at or above 557. Now it looks at the share's current volatility and determines the likelihood of it being at or above break-even if the current stop is hit. Now this happens on the 6th of December when it closed at 5.59. Now let's assume your first trade is up $1,000. How do you calculate your next trade? Would it be 19% of 25,000, 19% of 26,000, that's your initial 25 plus 1,000 in profit, or 19% of 20,000, which is what you have left? In fact, all three are wrong. JBL Risk Manager will calculate automatically how many shares you should buy based on your current true trading capital, which is your trading capital plus or minus the profit or loss if every position, open position, was closed at its current stop. Your shares may be up $1,000, but if you sold them at their current stop, they may only make you $800 profit, for example. So the current trade size calculation would be based on 25,000 trading capital plus 800 profit, or 25,800. Our break-even price for EQN is 505, shown here. And until this is hit, your initial stop loss remains in control. When this price is hit, the battle between our trailing stop begins. Now here the ATR stop is dominating at 601, as it's currently higher than the percentage stop at 579. Now the program signaled an exit on the 12th of December because our trailing stop was hit. So we click in the sell date box here and click the following trading day, the 13th here, and hit OK. For sell price, we use the closing price the 12th, for the moment being 585, and hit Save Trade. Now back to our trading summary page, we can see our trade has now moved from open trades to closed trades, summarized with statistics. We decide to sell at open the next trading day and it gaps up. We end up selling 942 shares at $5.98, not $5.85. We need to edit our closed trade by either double clicking on it or a single click and hit Edit Closed Trade. Now alter the sell price from $5.85 to $5.98 and hit Save Trade. So for any future trades, simply select the symbol, anticipated buy date, brokerage, and adjust any prices when necessary after entry. Oh, by the way, there is one more stop that's in place that may not be clearly obvious. That's a time stop, and it's triggered if the closing price has not hit your break-even price within 10 days. Some investors may choose to ignore this, but that's up to you. Now here I've included power pivot levels. It's used primarily by intraday traders, but I felt it may be of interest to everyone listening. They've been around for a long time and was a nice simple way for floor traders to have some idea of where the market was heading during the course of the day. The pivot point is a level at which the market direction changes for the day. Now, using some simple arithmetic and the previous day's high, low and close, a series of points are derived. These collectively are called pivot levels and updated daily. Now the reason pivot points are so popular is that they are predictive as opposed to lagging. The information of the previous day was used to calculate potential turning points for the next trading day. Now these values are used by institutional and experienced traders to help them determine where there is a bearish or bullish bias. Because so many traders follow pivot points, you will often find that the market reacts to these levels. Remember to always exit the first opportunity when your exit is triggered. That's all on power pivots for now. If you would like a free trial of the JBL Risk Manager, a free 14-day free trial, simply enter JBL Risk Manager into Google or go to www.paconsulting.net.au. You've got nothing to lose and so much to gain. Also available from Paratech Worldwide, and other resellers are also welcome. That's all for now. Any comments or suggestions are always welcomed. Thank you. And remember, plan your trade and trade your plan. I wish you all trading success. Thank you again.